basics of Forex trading. You know, they often say that if you want to really master something, learn the basics and master the basics. That's what we're here to talk about today. So if you're new to Forex, this is perfect for you. But even if you've been trading Forex for a while, we want to bring you back to what actually makes money. That's what's important, obviously. So let's look at a chart. So yes, it is true that the Forex market technically trades 24 hours a day. But the problem with thinking of it that way is that, again, while, yeah, it's literally true, the problem is trading it that way is not a good idea because, and I've got my Bollinger Bands on here, as you can see, and this is one of the best ways to illustrate what I'm talking about. So we could see that we get, now let's change the scaling here just a smidge so you get a better perspective. So we get a big move up. All right, that could be some big money right there. The market comes back down. Another big move up in price. Now look at this whole time here, and the market's consolidating. So anytime you're trading during then, you can see the times down at the bottom. Hour after hour after hour after hour goes by, and this is where you get your trading account chopped up. This is why you don't want to trade during this time. So time is a very important aspect of trading. And again, we get a big move up, and then a big move down. And actually, this is a real-time chart right now, so where we are right now, this would not be a time I would want to trade the euro. This is the euro-US dollar, as you can see. So what is the dealio here? Why is this happening? Why do we want to choose certain times to trade and certain times not to trade? And then if you hang in there for just a few minutes, I'm going to give you a free tool online to show you when are the best times to trade any particular Forex pair. Now, Forex markets move on the news more than pretty much most other markets. Well, crypto moves a lot of news as well, but economic news, and so you got to, absolutely must 100% better use a Forex economic calendar. So I've got one here. There's many of them. You can see the URL here. Feel free to reference it. Thanks to babypips.com. Good website, by the way, for Forex learning. And you go here, and a couple things you can look at. We'll set it to, let's say we're going to just trade today. You might want to look at the whole week. Depends on what your holding period is. About up here, you can go and you can choose today, tomorrow. I've got it set to this week right now. Here you can set your local time, which is awesome. So you can set it to your time. And anyway, as we scroll down here, what's awesome about this and what you need to know about this, let's see, today is Monday, June 26th. So we'll look at today. And these are my local times in California here. But what's great about, they have this row or this column called impact. So high, medium, low. And they give you the currency that it would most likely affect. And so now, if you're trading the euro, you want to look at these. If you're trading the British pound, you want to look at these. Canadian dollar, look at these. US dollar, look at these. All right, and then cross-reference it to whether it's high or low. Now, the markets, again, move dramatically, or I should say it this way, often move dramatically in the Forex market when these economic news releases come out. People are waiting for these. And so just as I showed you in the chart, this is often when you look at these big spikes in volume. So even though the market's trading, or trading is available 24/7, and yeah, little trades are being placed, those are not optimal times to be placing trades. Those are optimal times to get your account chopped. These are the times when the market's going to really move. And then after the market assimilates all the information about whatever economic news came out, then the market's quiet back down again. So make sure you are using this and you have these times set. What I do is I set an audible alarm for any of these times so that I know when they're coming out and I don't miss it. Here is that bonus tip that I promised you. Outside of the economic releases, here is a great tool. And by the way, again, put the source down here for you so you can go get it yourself. And these, so sure, again, Forex markets are trading 24/7. But the time you want to trade, if there's no economic release, is when there's the most activity, when there's the most liquidity. Number one, you're going to get the best fills. Bid-ask spreads tend to be good. Plus, there's just a lot of trading going on. And so when you're trading Forex pairs, you want to look at, okay, when are these various cities overlapping. So if you're trading, for example, the US dollar, that's going to trade most actively during New York. If you're trading the yen, it's going to trade mostly during the Tokyo active hours. If you're trading the London, or if you're trading the euro, it's going to trade mostly during the London time, or if you're trading the British pound. So the overlap, and again, by the way, on the website down here, you can actually go in here and change for your local time zone for convenience. So what we want to do is look for the overlap of these two times and then trade that currency pair. Same over here. In fact, I made I don't know what it is about the Aussie dollar, but when I trade during the overlap of these two markets, for some reason, they're not super active, but god darn, it just works out well for me. So this, I would say, is secondary. This is primary. So look for the overlap of the two. A lot of times people ask me, Barry, what currency pairs are the best? Well, the best ones are the most active. And then the subset of that answer is you want to trade during the two of the most active times when they're both trading concurrently. All right, I'm going to give you one more bonus tip today, absolutely free, and that is this. Another thing that the Forex markets respond to especially well is previous major support resistance levels. They don't respond to floor trader pivots as well. That was primarily a futures tool, but they really do respond well to previous support resistance. Now, how do we know which support resistance levels to use? And so, as you can see, I have a 1 hour chart here. Oh, you can't see that. Yeah, you can. It's right there. So, 1 hour chart. Now, whether you trade the 1 hour chart or not is a different issue. It's a pretty good one to trade because so many people trade it. But you definitely want to draw support resistance level off of major swing highs and lows from a 1 hour chart. Absolutely. Again, and that's a self-fulfilling prophecy because so darn many people use a 1 hour chart. Therefore, lots of people are looking for the markets to come back into support. So here we had a low. Market goes careening up. Again, that high volatility, back into a little low volatility. It comes careening down. And as you can see, this blue line as it goes forward, market came down here, came close to it here, and then smacked into it here, bounced off. Smacked into it here, bounced off. Going back into a little low volatility time period, and then zooms up to the 7th heaven. So that is another tool you want to use. These are the primary tools that you want to use in Forex. Now, you can use other things. Notice I don't have any indicators on here. If you want to use indicators, that's fine. But these are the most important things. One other thing that I have to share with you is, for everybody, is one of my free trade strategies called the rubber band trade. And I give this to all my viewers for free. I want to demonstrate to you, not just tell you, because talk is cheap and actions speak louder than words. So I thought, what better actions than to actually give you a trade setup that you can make money with, charge you the princely sum of $0, and go make money. Now, do it on a simulator first, and then if it works out, you can go back. If you want to get some stuff from me, great. If you don't want to, great. I just want to give to you value in advance. So feel free to go get it at rubberbandtrade.com. Rubberbandtrade.com. And you're going to get my, well, what I call rubber band trade. And it's a pure statistical model. So it's rule-based, objective, and I give it to you for free.